And good morning and welcome everybody to the TriggerCharts pre-market rundown for Friday, July 17th, 2020. Glad you're with us today. We have a lot of good things to talk about today. A lot of things that are going on in the market that you need to know about to get ready for trading. So let's do it. Let's get on with it. Before we go any further, I want to mention there's something on your screen to the right that you can see. Talks about the idea that this is just for educational purposes only. It is not for a recommendation. It's not for anything more than the idea that we're trying to help you understand more about technical analysis and the idea of when it is a good time to enter a trade, get out of a trade, be in a trade, not be in a trade, look at where the opportunities lie for breakouts, breakdowns, fast zones, all the things that we teach you each and every week here on the TriggerCharts platform. Of course, all of the things that we're going to be talking about today, all of the charts that you see, the indicators in particular that we provide are available exclusively on the TradeStation Trading App Store. So make sure to check that out. Every single one of ours has a 10-day free trial. So you can try the entire product with no restrictions at all for 10 days. I also put in the chat a quick link for you to have the ability to get some great training. We put out a lot of videos and we put them out in the past. You can check those out at that link over on TriggerCharts.com. Also want to thank you, as I have done for the last number of weeks, number of months in fact, for making us the #1 rated application, one of the most popular programs on the TradeStation Trading App Store, because obviously if you read the reviews, you'll know that this works. The things that we do work. So now, before we go on, I want to just set something up, because we know what a little while ago, we had a poll that talked about what time frames that you use. And I'm going to launch that right now. If you can go in there and answer that poll. I want to figure out what it is that you are using as your base time frame. Some people use very short time frames primarily. Some people use much longer ones. What we talk about here a lot of times is a daily time frame. But anything that we discuss, again, is from more of an educational point of view, and you could utilize the same theory on any time frame you want. So if we're looking at a daily, you can look at a 30, you can look at a 10-minute. I don't like to go below that. I think that there's not a lot of information available and not a lot of volume-based price action that's pushed into the level. So therefore, I think it's important to stay a little bit on the, I would say 10-minute plus. 30-minute is my preferred 60-minute, and I really do like daily to find out what's happening overall. I look at daily to find out what the big overriding trend is and where those breakout points are, then bring it back to, let's say, a 30 and see if those are picking up from there. So I'm going to leave that up, that poll, if you haven't gotten to it, just for a minute, and then we'll talk about it and we'll discuss it. But again, I just want to go through that. To the right here on the chart, you'll see that we have Netflix. Netflix under pressure. Yesterday came in last night after the close with earnings. One of the first technology, I'll call it consumer-related, one of the, I guess we can call it the COVID-19 stocks, the stay-at-home stocks, that reported. It wasn't so much that they disappointed. Their outlook was a little bit concerning. I think that the price of this is priced to perfection. Obviously, this blow-off top that we saw here earlier or latter part of last week into this week, where we saw it go from 515 up to 573, which is another 10% move on a couple of days, had to resolve a little bit. Right now, we have a new altimeter that's been formed right here. You can see that pretty wide. So that breakout that we had that we called back at about 457 moved up. You got most of that, got closed out at about 525 or so. And now you're in a consolidation range, picked right up back to the top right here at about 535 and then came back down. And right now, where are we pre-market? 491. So we're right about below this level here. It looks like about 485 is some interim support. You get below that, though, and you can see there's a hole here. But we'll talk about that a little bit more. One more minute for the poll, and then I'll give you the results. And as we do that, let's talk about what's going on. I think we've seen this week the typical rotation that you see oftentimes in the start of earnings season. What you see in the beginning of earnings season, it used to be Alcoa. Back in the day, it was like, okay, when's Alcoa's earnings coming out? And that was the marking point of when we saw and said that, you know what, earnings season is starting. But right now, that has all changed because Alcoa is not that important anymore. So what we look for is the banks. So what we saw was JP Morgan and Morgan Stanley and Bank of America, Goldman Sachs. they all came out. And I think this typical rotation that we're seeing is a little bit of a relief that, you know what, banks are not going under right now, that some banks are doing well, some banks not so well. Investment banks are good. We see that Morgan Stanley and Goldman Sachs and JP Morgan, hey, you know what? Their loan loss provisions were up a little bit, but their investment banking, particularly in fixed income, was really strong. On the other side, you know, you got the Cities, you got Bank of America, you got Wells Fargo, which is a disaster. Wells Fargo probably being the poster child for the area of the financial sector, the banks that aren't going to do well in this kind of environment, where you have a Fed that is pressing down the yield curve and a recessionary environment and people out of work and defaults rising, and the list goes on. That kind of a bank is not going to do well in this environment. We need the yield curve to expand. We need the net interest margin of those companies to pick up a little bit, and that's not going to happen for a while as we see defaults rising, as mortgage are being delayed, as you're seeing that while there may be a new pickup in new mortgage and acquisition, they're having a big problem with all the people that can't afford to pay their mortgage, who are in fact without a job. So employment issues in all the recessionary environment, not good for those kind of commercial banks that don't have the investment arm. On the other hand, when you look at Goldman Sachs, you look at JP Morgan, I mean, the Fed basically spoon-fed them earnings. What we had was a situation where the Fed came in and said, hey, we're buying bonds. We're going to be pushing down interest rates. And those banks were able to help other companies restructure the debt, issue historic levels of debt, help the Fed buy into treasuries, and therefore all those transactions really helped their earnings substantially. And that's why we saw a wide range of estimates to actual earnings on those companies. So let's take a look at this this poll here and get my official results. So what time frame do you use? 7% use under 10 minutes, 15%, 15 minutes, about 7% as well. 30 minutes we start picking up. Actually, this progresses higher through the time frames. About 13% of you said that they use 30-minute bars. 13% say they use 60-minute bars. Another 13%, so it's pretty much tied, 30, 60, 240. 240 is usually used a lot of times with people who trade currencies. Daily bars, though, win it with 44% overall. I think that is a very similar number to what we had last time we did this. So we're still seeing a lot of people using daily bars for swing trading. That's probably what you're doing. So let's continue on with our discussion here. Earnings, tech, and industrial starting next week. Really, the industrials next week, and the following week is going to be the tech primarily. The economic numbers that we're seeing, they're backward looking. However, some of them are a little bit better than are expected. We saw better numbers on our ISM surveys. You saw the manufacturing, non-manufacturing, some of the regional manufacturing as well, even though the Fed Beige Book came out and was pretty dovish, as you would expect it to be. We also saw that the potential for more stimulus is needed. That is coming from every angle. As we get to that income cliff that we talked about last week, July 30th, 31st, with the end of July, when there is going to be no longer any more federal subsidies of unemployment. That's $600 per week. So there's a big problem that's happening that Nancy Pelosi is saying, hey, you know what? We're going to do something. We're staying here until we get it done. The market is crying out for this. This is a big issue. This really goes to the heart of spending and why retail sales have done so well, and maybe the housing market has held up so well as well, because people are really not concerned about the fact they don't have a job. 75% of the people that are getting actually this $600 per week plus their state unemployment are getting more than they made when they had a job before this all happened. That needs to be corrected. Not that I don't want everybody getting as much money as they can. I'm all in on that. But the fact is that you need to make sure that people are getting a reasonable wage that is commensurate with what they did, and also look to stimulate the economy, but don't put it in to such a degree that there is too much money that is going to be a negative motivation to get them back to work. There's a big issue. Yes, with all the COVID issues surrounding it and safety issues as well. We are seeing some slowing, though. There is no question that we're seeing a slowdown in economic numbers from where we were. And we're seeing, like yesterday, the initial claims at 1.3 million. That is staying elevated. There is some concern that the current lockdowns or the phased reopenings that were supposed to happen on a pace that we're going to continue on through all the different phases have been slowed down, if not stopped. And we're not going to talk about all the cases. We're not going to talk about the deaths. It's a horrible situation. You see it in every headline all over the internet and on media. But we know the good news is there is some hope here, and that's the trade that we saw earlier this week. Moderna had their mRNA, their RNA-based drug that is looking to come out. They did a peer review. It was in the New England Journal of Medicine. And I read this from tip to toe. One of the things that I thought was really interesting was the lack of an expansive amount of subjects inside of this particular phased review. There's only like 45 or so, something like that. Johnson & Johnson's looking to do something with a few thousand. We also have AstraZeneca out. Moderna and AstraZeneca are really mouthy. These two companies, it's pretty amazing how much they've been talking about this. They want their CEOs on TV. And the second time in a row, Moderna comes out with a major announcement, and the day after, executives dump shares. Now, mind you, it was a scheduled share dump, but who knows if they came out with this just in time with the knowledge there was going to be a share dump, propping the stock up. Something about it smells a little fishy. Moderna, I hope that they come out with a vaccine that has the antibodies that last forever, you know, but AstraZeneca has something that's pretty cool right now as well, and there's a couple other things floating around there. The bottom line here is that markets are hoping for this vaccine. We're all hoping for a vaccine. But this did favor the out of favored. So we saw an incredible move on the cruise lines, the airlines, anything related to travel and leisure, anything that was out of favor fell down the next day when we saw that the extension of the no sale order has been extended now to September 30th, 2020. So that's a problem. But nonetheless, we are seeing some better news out of that. SPACs, special purpose acquisition companies, have been on fire. We'll talk about a couple of those today. Hopefully you've been watching those and following some of the ones that we talked about. They've been cooling off a little bit. This may make another opportunity for one final upturn before these things potentially crash down. I would think that a lot of people that had wanted to get into these that couldn't get into these because they went from 10 to 16, a 60% move in a day or so. When they start coming back down to earth, some of these will be bought again. We saw some good news out of one particular one this week that really is moving and moving today as well. Where are we? Well, the futures are up 117 on the Dow. They're up 20 on the ES, on the S&P, 124 on the NQ. Don't let that fool you. It's a lot better than it looks because after hours, that 4 o'clock to 4:15 time frame, there was a big drop in the markets. And when you look at the fair value calculation to today, I think the ES is up maybe 0.2, the Dow is up 0.1, the NASDAQ is just about even, maybe a little bit positive this morning. We can look at that when we look at various areas of the market. What you want to do, by the way, is to really figure this all out, is not to look at the futures necessarily. Look at the ETFs. You look at DIA, that's for the Dow Jones Industrial Average. That's an ETF. It will tell you what the net return is going to be, and that will calculate your fair value into it. SPY for the S&P 500 and QQQ for the NASDAQ. That's what you want to look at. Market started to price in a Democratic lead. That's something we talked about last week, possibly. We'll see. Market is overheating again. Let's kind of look at that right now. Pull that up on the chart here. We saw that it was a +2, +3. Starting to see this getting into hot zone. All this may mean is that the trend is continuing right now. A couple of days ago, we did see a +4. It did resolve lower right about, I think it was this day right here. We saw some +3s that were coming in, right? Again, all this does is give us market sentiment, the feeling of where we are in all this. Are we overdone? Are we oversold? Right now, we're kind of close to equilibrium. You can see by the gauge in this conversation on the right. Basically, we're close to equilibrium. So what we should see is the continuation of this trend. And as we know that buyers like to buy, there are a lot more. It seems that right now there seems to be a much greater emphasis on the long side because of all the stimulus that's in there and the opportunity that's out there as well. All right, so what else we got? Oh, CPI. You see CPI this week? Wow. 0.57% on a month-over-month basis, which translates to over 6%. Over 6% on an annualized basis. Now, if you look at the charts, and I put some charts up and I did it on Twitter as well, it's not that big of a deal because we saw that big hole, that negative, I don't know, 7 or 8% over the last couple of months. This is just a return back to normality, getting prices back where they should be. Don't forget how low oil and gas got. That's a big component of this. Food costs also were a problem. They're all spiking up pretty well right now. I think this is more of an average over, let's say, a 6-month period that we need to look at before we get too concerned. We know the Fed is going to let things run hot for a while and use a new averaging process to get inflation towards this magical 2% that they say they want to get to. But right now, what we have is a situation where inflation has picked up. Not, I don't think, anything to really worry about. Next week is a light week for economics. We have existing home sales and initial claims on Thursday. I don't think it's anything Monday or Tuesday at all. New home sales coming out. We're going to look at SPAC space. I want you to look at these two right here. If I can do this. I guess I can't do this. All right, not letting me do it. Tesla and Telsa. Look at those two. Really kind of something very interesting. If you actually put this in and you look up on Google, this stock symbol, Tesla, and this stock symbol, Tesla, they both come back to Tesla. And I think a lot of people are thinking TLSA mistakenly is Tesla. Let's take a look at that. We'll look at a couple of the banks as well. And of course, your names that you want to look at on this as well. There's a couple of SPACs that I'm going to talk to you about. One is called SPAC. Spartan Energy Acquisition was $10 forever. And this is kind of one of the ways that you can pick up. Is this a SPAC? Well, yeah, if it's not gone anywhere, a straight line like this, even if we take this over, there's a daily bit. Look, even if we go like this, it's kind of like this $10 forever. Then it finally picks up when somebody either notices what's going on, or this is going to be now Fisker Automotive. They bought the assets for, I think, $2.5 billion. That was right in between where the sweet spot was. The hope was for $1.5 billion. Some people thought it was going to be $5 billion. But right now, we look at this SPAC, and again, as we have seen before, a lot of these go to the moon, right? We doubled up real quickly when everybody got in, and then it came down. We saw the aileron really picked up nicely and kind of called it. Then we got a nice long position right out of the gate here and closed it back down at about 15. So probably a 25% gain on that, all told on that. Right now, I would say that, somewhere about 1292 is support. It looks like it's trying to hold the levels of the lows over the last few days here. Something to watch. SPCE, this is something, one of my favorites. This has a really classic look to it that I want to share for an educational purposes right now, because something's really important with this, and I'm going to actually do a couple things here. I'm going to put the radar on here because I want to show you something, and I'm going to draw a couple of lines. So let's kind of do this first. Let's kind of take this. I want to make sure we're very clear on this level right there. That is the top connecting several different levels of the top end resistance on the altimeter. Now, when you look at this, you also want to look at something else. Now, I just put these radars on. We have relatively, I would call them normalized radars, right? These are your normal distributions. They're kind of fat and chunky in the center, and the tops are kind of just a little kind of goes just like this, just a D, I'll call it. A little bit less over here, really good support. I'm going to draw another line, and let's change this color here because this is going to coincide with a high volume node right about there. I'm a little bit off. It's a little bit low. But basically, that's an important level too. You see that range that we're looking at right there? Really important. But the most important thing that I want to show you is this. When I take off the radar now. So now we have this top end here that when I connected several levels, it couldn't get above. You see the tops that really are showing up very important levels, right? Right here there's a top, right here's a top, and this line, this line that it couldn't get above. Couldn't get below this line either. Again, we're connecting several lines from right to left. Always looking from right to left. This is really important. When I see this consolidation between about, we'll call it 16.5 to about under 20, then I start to see a breakout above a key level that has been in force going back to February on a daily chart. This is really kind of cool. This is a classic look that you want to see. You want to see where if it's banging up against the resistance, banging up against resistance, banging up resistance, comes back down and consolidates, and bangs up against resistance, comes down and consolidates. That's what we saw going into this area right here, right? And then it kind of like this. And then it just was sitting. Then it started to rise up, and then the news came out that they have a new CEO that's going to be involved. They poached somebody from Disney. Stock came up really nicely. yesterday through that level of resistance. We called a long right about 19. Oh, we'll call it 20. 20. We'll call it $20. Called a long on the autopilot, turned yellow. It was a move above. And in fact, if we were thinking about getting into this, waiting for the confirmation on the next bar, I would have said, you know what? Maybe at about 2038, 2040, we'll call it. If we can sustain over that, I will stay in overnight, because not only is it over the level of this altimeter, the altimeter that is right here, right? So you see the range of this altimeter right there, but it's also over this altimeter right here. And once we went over that altimeter, I'm pretty good with saying, you know what, I'll hold it. Now, if you did, you'd be rewarded. It's up another 8% today in the pre-market. So it's right now trading at, what is it trading at? 22.80. So there is some movement on this, and there is some excitement back on this, I think. And we look at this again, when we look at the chart of this, this was another long period of time that's been consolidating, finally making it over. The other thing that's really important to look at, and I think we really need to focus in on, is this, that there is really nothing in that area looking back. And I could probably draw it even further back, right? There's a giant hole. We'll connect that. We'll just pretend that's all one big box. There's a giant hole there. The opportunity to have a fast zone, especially when we now put back on our radar, there's nothing there. When there's blank, just black space, think of it as a black hole. Think of it as the opportunity for a stock to move very quickly through a zone. And when that happens, those are the areas that we look for fast moves through a vertical space, right? We don't really concern ourselves too much with, okay, it's trading in a long-term level of overall consolidation. That's a horizontal move that usually moves slowly, back and forth, back and forth, back and forth. We want a vertical move quickly through time, that as it's going back and forth, all of a sudden it breaks and it takes off. So when we're looking at this right now, we had this really nice consolidation over time, and we're looking at this very simply by looking at where we were, right? We could draw a box, and you could take, I'll switch up for a second here, I'll draw the box that's on TradeStation since you don't have the annotation tools. We'll just draw a simple box, and we'll go back and say, okay, look at that. That was an area of consolidation. We're a little bit above, a little bit below, tried to get out, tried to break out. But where do we go next? And if I'm going to draw my next box and I'm going to say, where are we going to go? I'm going to be looking at this zone right above this as a key level that hopefully, if we do break out, because there is a very limited amount of overall resistance here, we're going to get up to that, I'll call 28 zone. Again, not a recommendation to buy or sell any security here, but a really good example of what, when looking at the algorithm this is based on, which is market profile, which has been made famous by Peter Stottlemyre, the whole idea that we can look at every single tick of every single trade, how much volume was traded, take that, bring it all back, calculate it, crunch it, then push it back out as to an algorithm that we develop that shows where those levels are very simply inside of an altimeter range. And also with the radar, if you want to get a little bit more granular, you can look at exactly what those ranges are, where the biggest volume is. These yellow lines indicate the biggest volume. So they kind of lined up really well right along the bottom there. So a good lesson in finding those breakout points, looking for move from a horizontally consolidating into a vertical move on this. And by the way, I'll mention, if you want, we have about 7 or 8 minutes, put your stock symbols in. This is your time. It's free. We're going to give you all the information you need. Put your stock symbols in, and make sure to go over to the TradeStation trading app store, please, and also get your free trial. Also see all the videos that are available on the site. This also will be recorded and on the TriggerCharts webinar channel over on YouTube. So you can check it out there or over on TriggerCharts.com. Tesla has been in a breakout. It doesn't seem to want to go down at all. It did see, again, another, we just saw this, another level back last week of that blow-off top, bringing it down. 1435 is probably your baseline on this. If it does break down from there, I mean, there is really nothing to the left on this. But what I want to show you is this stock, too. This stock is a very thinly traded Tiziana Life Sciences. We do think that people are getting confused with this and Tesla. And when people start to wake up that this isn't Tesla and some other underbrand of Tesla, I mean, look at how this stock has gone. I mean, so let's focus. Look right here, right? It went from $2 to $10. Let's look at Tesla now. Has the same chart. that same move in that breakout. Again, that's TLSA. Okay, moving in the breakout. I don't know what's going on with this thing. It does seem to me that there is something wonky going on with it, that there is some confusion with it. Just something to look at. NIU, New Technologies, obviously did in fact come back down very significantly after a big ramp. There was some decent earnings there, consolidation, falling through the gap. There is a zone here. Even though we see this aileron is holding up really nicely, that's good from the buy side, right? The momentum is to the buy side, but this roll that we're seeing, a little bit of a change in the characteristic right now, is a bit of a concern. That does coincide with multiple levels of, you see these little red dots on the bottom? I'll spotlight them for you. Right on the bottom. You see those little red dots all the way over here? Like this yellow one? These are clusters. These clusters are really important because they start thinking about maybe there's a turning point that could be happening here if the trend does change. And we do get kind of a blow-off area of an overreach in terms of this. And it did kind of call it pretty well here. Right now we're starting to see this go down. I would get concerned, right, if we do get below the 0 level, if it gets there. Right now it looks to me a wide range here. And the wide range looks to me to be between, I would say that probably $20 and $15.95. Looks like there's decent support in this range, right below 15. Wait for it to come to you. You don't need to be greedy. You don't need to, get too crazy about this. Wait for it to come to you. If it doesn't come to you and it moves away from you, that's okay also. You don't have to be on every single trade. PLNT has been kind of a perennial favorite of mine to look at the short side of this. Obviously, it did come up very nicely from its low levels in March, which was trading at about 25. It did reach 80. All these clubs closing down. This is a fitness club. I mean, all these clubs closing down, all the problems. Stock seems to be back in a downtrend. We did see a nice pop the other day, about a 10% move on the news of the vaccine. BAC. Anybody see anything here? I don't see anything. I see a pretty lackluster overall aileron. Momentum is just nowhere to be found in either direction. That's very substantial. Kind of came down, it comes back up, it consolidates, wide, gappy, ugly. Not something that I'd be looking at. Goldman Sachs tried to break out, tried to get up, obviously into its earnings, came down, currently trading up a little bit pre-market, but nonetheless, it's kind of sitting on its resistance right here, 215. Morgan Stanley looks a lot better. This chart looks really a lot better, actually. If you look at the Morgan Stanley, see a really nice move down that was capitalized on pretty well from the autopilot. Look at that great red zone. I mean, you got a short right here at about 52. You covered it somewhere at about 45, got back into it a couple of times at 45, and then closed the short somewhere at about, I would say 31. Then you got back in long 31, got out of it here at 40. Consolidated a couple of mishaps here, but no gain, no loss really. Got back long at 41 and been long ever since, and now trading at about 53. This stock looks very, very healthy. I would say, though, there's some resistance coming up in this range, right where we are now, actually. You kind of look at that first line of resistance right there. Netflix, consolidating down to, what, 495. Last night it was down at like 460. So it has come back a long way already. Obviously, the Netflix lovers are going to buy this no matter what. Somebody's asking about Square, SQ. Square is dangling. So it's kind of starting to show a little bit of a divergence on the momentum here on a daily basis. Dangling right on its support here. Needs to hold this pretty well. I would say it's 121 and change. Currently trading 120.75 pre-market. I would say 122 is a level that's better. I would say that, down to 107 is probably an area that I would wait for. And frankly, I'd probably wait down to 100 again. I know that's a little bit far from here, about 15%, but I don't see any reason why, if we have a little bit of back by the market, that this can't get hurt a little bit. Question came in, what are my thoughts about ARK Innovation, ETA, and iBuy, which is online retail? Both have great runs for this year, but one ends next. The ARKK basically is a Tesla. It owns Spotify. I believe it owns Spotify. It owns a variety of new age. They are balls to the wall. They have like some ridiculous target, like a worst case scenario, $7,000 target on this I think her name is Kathy Woodford, something like that. Anyway, she runs it, and ARKK, basically, what is it? It's just, all the names that are go-go, techie. A lot of Tesla in here. They seem to be trimming that on a regular basis. A lot of names that you recognize. What I'll also share with you is the other question of iBuy. Markets are open. This is another ETF in the retail space. Pretty amazing. Obviously, I would think that they own things like Amazon in a big way inside of here. I mean, there's no way the retail is going to go from 40 to double up here and reach essentially an all-time. Is this an all-time high? I guess all-time high. To a double. Well, not a double, close to a double on the fact that on just retail. So think about that. Good questions. Appreciate it. We're going to end right there. I want to thank everybody for joining us today, and we'll see you again next week for another session of TriggerCharts pre-market rundown. Thanks for joining me.